The views expressed in this podcast are not to be taken as either trading nor financial advice. Neither the announcer nor the Sirius Report make any claims to be certified financial advisors, and all reporting is dedicated solely towards being both informative and educational. Good afternoon, everyone, and welcome to the Sirius Report Market Wrap-Up for Monday, October 7th, 2024. Well, we're starting into earnings week for Q3, and we are going to go ahead and see how the markets fared, especially after all the chaos that took place in the Hurricane Helene, the upcoming Hurricane Milton, and of course what we have as a response to the Fed's cutting interest rates, seeing this in the mortgage market as well as in the bond market. So with this being in mind, let's go ahead and take a look at how everything fared. Well, the Dow was down at one point over 550 points, seeing a little bit of a recovery in the last hour of trading. It ended up down 398 points to close out the trading day at 41,954, enough to lose the 42,000 handle. While the S&P 500 was down 55 points to 5695, and the NASDAQ lost the 18,000 handle, down 213 points to 17,923. In the bond markets, well, overnight, Thursday, Friday, we had a half-point boost to mortgage rates. And where did that come from? That came from the expectation and realization today that the 10-year now is back over 4%. Interesting enough, this sort of is an opposite reaction to what the Fed has done by cutting rates, hoping that it would bring down the real rate, not just the notional, but the real rates to sort of help the housing market and the general economy. But unfortunately, and we're going to see later this week, inflation has reared its ugly head, and it's only going to get worse by things that are taking place in the energy markets. As I mentioned, the 10-year was up 0.047% to close out the trading day at 4.028 yield, and the 2-year was up 0.063 to 3.995, nearly coming flat even with the 10-year. Future slide as yields rise back over 4%, the curve reinverts and oil surges. Equity futures were lower as the selling in treasuries accelerates after strong U.S. jobs, take that with a grain of salt from last week, slash bets on big interest rate reduction next month as the Fed and the overnight surge in oil pushed Brent to $80, which sent both the 2-year and 10-year above 4%. And that's what I'm pointing out to, is it's the energy, it's the oil prices, and Goldman has an interesting look at that, which means that the price of oil could get worse, not based on anything geopolitically in the Middle East, but because they pretty much in the paper markets shorted the heck out of it to keep prices down, but we may suddenly see a short squeeze coming out of that. In the dollar market, the dollar and the DXY against a basket of currencies was down 4 cents to 102.49. Meanwhile, in gold and silver, a little bit of a sell-off. It had to do partially with covering margins, using one market in the paper markets to rob Peter or pay Paul for the other. Silver was down 50 cents to 31.75, and gold was down $11.20 to 26.43. Well, we have something that may be a boost to the silver markets, as well as palladium and platinum. A report from the Russian news agency Interfax last week reveals that Russia plans to substantially increase its precious metal reserves in the coming year. We already know that they bought a lot of gold over the last 5 years in particular. That's the official, though they've been buying it well before that. But Russia's state fund plans to acquire gold, silver, platinum, palladium, and gemstones. And this is an announcement from the Russian Minister of Finance proposing to keep spending on precious metals at a clip of 51.5 billion rubles in 2025, and including starting to buy palladium. Will this lead to a short squeeze? Well, we're supposed to find out more. The rumor is of a potential official announcement on about the 17th or 18th of October. So this is something to look forward to, and we'll see if it comes to fruition, if it's an official announcement or if it's just going to be something that's going to be bought under the cover of night. In the crypto markets, a little bit of a rebound for both Bitcoin and Ethereum. Not much, but just enough, even though we did have a strong weekend over the past 48 hours. Bitcoin in the last 24 hours was ended up 0.61% to 63,201, while Ethereum was up 0.36 to close out the trading day at 24.48. In the oil markets, as I mentioned at the beginning of the day, Brent crude had recrossed over the 80 handle, and it ended up over 81 when all was said and done. WTI was up $2.76, 3.71%, closing out at 77.14, while Brent crude was up 3.09, or just short of 4%, closing out the trading day at 81.14. Has a historic short squeeze in oil begun? Last weekend, it was warned that the latest data from Goldman Sachs, a massive short squeeze in energy stocks was on deck. Specifically noted that at a time when funds were at the most short oil on record, the broader energy space was the most net sold sector on record, driven entirely by short sales, not standard buying and selling of stock, which outpaced long buys at a 6.5 to 1 clip. The hint of the next mega squeeze as the recent short selling in energy was the largest in 5 years. So we're talking going back to just before the pandemic, when oil was running about $120, $130 a barrel. So we've been really pushed down recently by the fact that we've gone into recessionary mode, both in Europe and the United States, and the paper markets have been, shorting it to the extent of a 6.5 to 1 ratio. So are we really on the cusp of a short squeeze? Watch what happens if Israel decides to do a retaliation strike on Iran, and in particular what has come to light, their energy infrastructure. This happens, you could see the Strait of Hormuz close, you could see oil fields and refineries all across West Asia get torched, and you could see oil and energy prices getting up between $125 and $200 overnight. Something else that's not going to help energy, especially to Europe, Ukraine to end the gas transit agreement it has with Russia. Ukraine will not extend its gas transit agreement with Russia after its expiration, according to Prime Minister Denis Shmyhal, announcing during a joint press conference with Slovak Prime Minister Robert Fico. Decision is part of Ukraine's broader strategy to curb Russian energy revenues, which Kyiv claims are used to fund the ongoing war. Our strategic goal is to impose sanctions, blah, 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 the usual rhetoric. He called on all European nations completely abandon oil and gas from the Russian Federation, and we've already seen what doing that, thanks to the destruction of Nord Stream 2, has occurred already on the continent. So some of Europe, Central Europe, and we're talking Germany, France, we're even getting around to the Slovakia, we're getting to Hungary. They rely upon energy and natural gas coming through Ukraine to refineries and to power plants on the continent. If this is cut off, then really this is Ukraine sticking its middle finger at Europe for not going all in this conflict, and you're going to see things get worse and worse and worse, and we're talking as we're heading into the winter months. Taking a look at the week ahead, as I mentioned, we got earnings. We're going to take a look at what's going on this week. Not really a whole lot. Earnings really starts on about Friday. Let's see, today's the 7th. We have consumer credit, and we're going to take a look at that here in a moment. Tomorrow we've got small business optimism, but the important part is what comes on Thursday. CPI, both month over month and year over year. The expectation is it's going to be flat, but what we're seeing, of course, with rising prices and the interest rates moving up, it will be interesting to see what core inflation, either CPE as well as CPI, what the Fed does going into their next meeting. Then, of course, we also on Thursday have initial jobless claims. We have on Friday PPI, Producer Price Index, and then we have the University of Michigan Sentiment Report. Well, as I mentioned, earnings start today, but really there's just one outlier of no real note. The big one starts, of course, on Friday, where we get a number of banks. JP Morgan is always one of those who does the first week of earnings. We have BlackRock, Wells Fargo, Bank of New York, and the like. So we'll be if we do a market wrap up on Friday, we'll talk about what some of their earnings and releases are. Well, I said there was one in particular for today, and that's the consumer report, and we see some cracks in the credit. Credit card debt suddenly plunges, the most since COVID, with APRs hitting record high. As I mentioned, it doesn't matter what the Fed is doing about cutting rates. The treasury yields are causing interest rates on credit cards as well as mortgages to spike, exactly the opposite of what they desperately needed. And because of this, with consumers at an all-time high in credit card debt, they can't afford it anymore, and many have been using their credit cards just to be able to sustain month to month. Now, going into the election, this is going to be a huge detriment to the incumbent party that holds the White House now, and it will be interesting to see what's even going to get worse thanks to the hurricane devastation in North Carolina, South Carolina, and the one incoming on Florida. Finally, the last thing we're going to take a look at, Google tumbles after judge rules the tech giant must open its app store to competition. Now, there's been lawsuits with Apple about their app store where they use it to gouge companies. If you want to put your application up on their Apple store, then they can even skim upwards of 30% and even have been trying to take a bite of subscription fees. Google's Play Store, which isn't as big, or at least as prevalent for taking fees, still there are some apps on there that are there's a charge to them that Google takes its cut. Well, Epic Games decided to take the whole kit and caboodle to the courts, and it looks like the judges have ruled in favor of big business. Federal judge in San Francisco just handed victory to Epic Games in its long-running antitrust challenge to the technology giant's App Store. The judge ordered Alphabet's Google to overhaul its mobile app business to give Android users more options to download apps and pay for transactions within them, following a jury verdict last year for Fortnite maker Epic Games that was with the Apple Store. So hopefully we're going to start seeing a breakup of the monopolies in the tech industry, not just the search engines, but the businesses that have been accumulated over time by Google, by Microsoft, by the like, Amazon, etc. And maybe we can finally get a little bit more competition and be able to have better pricing. Anyway, I want to thank everybody as always for stopping by on this Monday to get your market wrap up for October 7th, 2024. We want to thank you also for being a part of the Sirius Report community. Don't forget to subscribe, like, share, comment, send this out to anybody you think it'd be importance to. And until the next time we get together, have a great Monday.